Hello and welcome to ActivTrades, what you need to know ahead of the Fed. And today I'm going to be bringing you really at the key points that traders need to be aware of ahead of that all-important Federal Reserve meeting this Wednesday. I'm going to begin with the US dollar. And in front of me you can see a US dollar weekly chart, and you can see really the almighty uptrend that the US dollar has been in, and also you can see this period of consolidation that really it's been in since 2015, where we've been in that sideways action. If we have a look at the 100-day moving average on a weekly basis, we've only managed one close underneath there since the uptrend began in 2014, and that 100-day around the 95.20 area is really the key. If we can have two closes underneath there and see some losses, we could really see some downside start to begin. But we also have to bear in mind that we're above the 200-day moving average since the summer of 2014. It's been such a strong uptrend that it's going to take a lot to really bring this US dollar down. If we now move days under the daily 200-day moving average, and now we're just really starting to touch the top of that again, and I think we're sitting right around the most interesting point that the US dollar has been for a while. If it can start to gain some momentum on a rate rise and really start to push above, or be very interesting to see what happens if they don't raise rates and we can start to see it start to really fall off again. If we have a look at this range that it's been trading in since really the middle of June, it's been trading in a 300-point range, and we can see that the 50% is right around the 95.80 where we closed above last week, and really this range has been defining the US dollar since really late June of what's been happening. It's just been going above and below, and we're currently sat around the midpoint. So these are the areas that you need to watch out for, that 97.50 and also that 94.09 break. If we can start to break these established ranges, then we can see some movement in the US dollar. If we continue with the theme of the US dollar, we're going to have a look at the US dollar Swiss franc, and this has really been trading in a complex triangle, and it's just really about to make a breakout. If we can break above the 99 level, then it'll be a breakout to the top side, and it will be an explosive breakout, because with this complex triangle it sits in about a 500-point range. And also if you have a look to the bottom of it, we can see that the 96.50 is really key, and if we can start to break below there, then we can break towards the downside. So we're really sitting, much like the US dollar, we're sitting right mid-range in this triangle, and we're really waiting for an explosive break either way. If we have a look at the pound against the US dollar, at the 200-day moving average is really miles away, around the 140.40 area. That's something we need to bear in mind, is that the 200-day is so far away, and that's really indicating that we're in such a protracted downtrend. The 100-day moving average is around the 136.83. So we haven't been able to test that since Brexit has broken off, and if we don't get a rate rise, that may be a target for the pound against the US dollar balls. If we have a look at really the Brexit bounce on the pound against the US dollar, the Brexit bounce, the 50% of the Brexit bounce sits around the 131.29. And what I mean by that is, since we had sits around the 131.29, so traders need to keep their eye on that crucial 131.29 if we do see any upside in sterling, and that's really a key pivotal area for the sterling bulls. If we have a look at the euro against the US dollar at the 100-day weekly average, and really the main pivot on this currency sits around the 112.48. That's really a pivotal level, and as you can see by the chart in front of me, we haven't been able to break above there. If we start to break and close above that 100-day weekly average, then it's really a game changer for the euro. If we have a look in front of us here, we can see, of course, that 200-day moving average, and we can see that much like the US dollar has been trading below its 200-day moving average, we can see that the euro against the US dollar has since August been sitting above it. So we closed the week only a few points above there, and it'll be really interesting to see what happens with the interest rate decision with that 200-day moving average around the 111.52 area. If we also have a look now at the weekly chart on the euro US dollar, and we can have a look at this range since 2015 that the euro against the US dollar has been sitting in. So you can see that the 104.60 low and that 117 high, we've been sitting right around in that range. We've been just really coming up and down around there, and we're now sitting around potentially the middle point, which is located around that 110.87. So that's something to really watch out for. The 50% of that range that we've been trading in, the 117, really 15 level to that 104.60 level. The 50% of that is the 110.87, and that may be a target to the downside that the bears will need to test and see if they want to break below that, and that's really a key area for the euro. Thank you very much. This has been Active Trades, what you need to know ahead of the Fed, and you can trade the euro dollar for a 0.7 spread at ActivTrades, and it also offers negative balance protection.